Hello and welcome. You're watching The Money Show. I'm Kavita Thapliyal, and this is a show where we answer all your personal finance queries. In fact, this is a show where we give you strategies for each of your financial goal. And today, the special is our viewer query section. And just in case you're watching the show live and want to send across your questions, you can do that on our WhatsApp number, which we'll be flashing on the screen. It's 8657974571. And we also have an email ID where you can send across your queries. And the email ID is themoneyshow@etnow.tv. So any question related to your financial portfolio, any investment strategy that you're confused about or want to begin your investment journey, we have it all answered, and we have you covered by our experts who will do your life financial planning and answer all the details that you need for your financial planning. And today on the show, I have with me Nisreen Mamaji, CFP Moneyworks Financial. Nisreen, hi, good evening and welcome to the show. Nisreen, the focus will be on our viewers' queries today, and let's begin with Gopal's question. Gopal says that he's 48 years old, and he's writing this question from Hyderabad. In fact, he's a big fan of our show. Thank you so much for that. Gopal, but in terms of investment, he says that he commenced his journey in 2017, and he has an equity debt ratio of 60:40 in his portfolio. So now he is confused about his debt allocation. He says that due to recent changes in budget 2025, removal of indexation benefits in debt funds, fund houses brought new category called as income plus arbitrage fund. So he's asking if he holds this for 2 years, which is Kotak, HDFC and DSP, how are these funds to allocate in his as an allocation in his debt part of the portfolio? And for that, he clearly needs your recommendation. So very interesting category, but I am really not sure if this particular category can replace his entire debt allocation. I don't have the details of what other allocation in debt he has, but income arbitrage is a very interesting category. We've seen fund houses coming up with the new special funds on these lines post this change also. But what kind of debt allocation can it really replace, Nisreen, and to what extent you should be considering this?
Sure. So, over the last 6 months, actually, many fund houses have introduced this particular category. We have Aditya Birla Sun Life, HDFC, Kotak Mahindra, HSBC, and Bandhan. And what they have done is they've repackaged, the existing schemes, while others such as Baroda, PNB, Paribas, Tata, Union, UTI, and SBI, they have launched or they are in the process of launching funds that combine debt and the arbitrage strategies. So, some of the data suggests that from 743 crores, this category has gone up to nearly 3,000 crores as of April 2025. Now, basically the portfolio is split into two categories. We have 65% in arbitrage, which is equity and derivatives, to qualify as a equity orientation for tax purposes, so that after holding for 2 years, you are eligible for 12.5% equity taxation. And 35% is in debt instruments for the predictability and the stability that debt can offer you. So what has happened that in the 2023 budget, basically, the appeal of debt funds has gone down because now you're taxed as per your tax slabs. And for those in the highest income tax bracket, that means you might have to pay 30% upwards, for the capital gains that you might earn on a debt fund, where the yield to maturity is anyway on the lower side. So, your net return after tax can be predictably lower. So the fund of funds now, which is this income and arbitrage combination, that got a tax boost because if you hold it for 2 years, as I said, you'll be eligible to pay only 12.5% tax. So the repackaging of existing the debt and the arbitrage category funds, is giving you a debt-like feel, but with better tax efficiency. So if you have asked, for an option, one can suggest the ICICI Prudential Income Plus Arbitrage Active FOF, where in its earlier avatar, it was the Income Optimizer Fund. So, it's given a return of about 10.75% in the last 1 year. Now, you've also asked, some sort of suggestions for your debt category, because your income and arbitrage can't really replace your debt category in that sense. because there will be some amount of equity and therefore some amount of volatility also. Secondly, this depends on the arbitrage spreads that are currently available. So in an era when you do not have an arbitrage spread, you might get very low returns, even possibly lower than your debt portfolio. So since you haven't mentioned your time frame, I'll just give you a few options of debt products. So for example, if you're investing up to 1 year, you can look at ICICI Prudential Liquid Fund, Nippon India Liquid Fund, or HDFC Liquid Fund. In your ultra short category, you can look at Kotak and Axis. If you're investing for about, say, 1 to 3 years, you can look at low duration funds, which could be ICICI Prudential Low Duration or HDFC Low Duration Fund. You can also look at short term funds such as SBI Short Term Debt Fund, Axis Short Term, and Kotak Bond Short Term short fund. And if you're looking at the category of 3 to 5 years, which is like a moderate risk, you can look at ICICI Prudential Banking and PSU Debt Fund and Nippon India in the same category. Also, you can look at corporate funds, in the 3 to 5 year segment, which could be HDFC Corporate Bond Fund and Aditya Birla Sun Life Corporate Bond Fund. And if you're looking at dynamic bond funds, you can look at SBI and Kotak. So I've given you all the options possibly of the debt fund category, 1 to 3 years and 3 to 5 years. And then more than 5 years, you can always look at the dynamic category or the long-term funds. So I hope that answers your query. And income and arbitrage funds is typically for a shorter time frame, say less than 1 year, but no, it doesn't replace a debt fund because a debt fund is completely different in terms of stability and tax.
Sure.
Kavita?
Yeah, sure. Gopal, I hope that answers your question. And since we don't have you on the phone line, we would request you to send across any other question or any further explanation that you need on this particular query. Nisreen, let's take up Sridhar's question. And Sridhar is again investing 35,000 per month and needs a corpus of 1.5 CR in 10 years and needs a regular income of 75,000 after that per month. And Sridhar says that he can step it up, his investment by 5,000 every year. ICICI dividend yield 5,000, India opportunities 5,000, HDFC small cap, mid cap, flexi cap 5,000 each, White Oak multi cap, healthcare and multi-asset 5,000 and 2,500, 2,500 each. Okay. Multiple repetition of AMCs. I don't know why. I mean, he's got HDFC and ICICI and he's got White Oak also. But then he could have, I mean, in terms of diversification, he's got a flexi cap, he's got a multi asset, he's looking at mid cap also quite a bit, a good amount of that exposure. But it still doesn't look stable. Why? Is it because there is no large cap?
Sure. So, I'll discuss each fund actually and give you a revert on
Sure.
that and look at
Yeah,
what
yeah.
is the better, asset allocation for the entire 35,000 rupees. But the first, response is that he wants about 1.5 crore in 10 years' time. So for that, he will have to do a 10% step up. Besides 35,000 every year, you step it up by 10% and you do that for about 11 years. And if we get a compounded annualized growth rate of about 12%, then you will reach your target of about 1.5 crore. So just keep that in mind that you'll have to do a 10% step up and you expect a growth rate or a compounded annualized growth rate of about 12% in the next 10 years. So make sure that you're reviewing that, and so that you can start your SWP after 10 years, which you have mentioned about 75,000 rupees a month. Now, I'll discuss each fund basically. So if you're looking at the ICICI dividend yield, you're investing 5,000 rupees. So dividend yield funds tend to be a little conservative. So you can replace or reduce this, and go for a slightly more growth oriented fund. So you can add that to maybe your a large cap fund actually. Then you've looked at ICICI India opportunities that you can continue. It's a good performer. HDFC small cap you can retain, HDFC mid cap you can retain, and HDFC flexi cap also you can continue and retain. White Oak multi cap, you can just review that to continue. It's a good fund for now, but just make sure that it continues to remain on track in the next 1 to 3 years. White Oak Healthcare, you're investing 2,500 rupees. So this is basically very high risk because of the sectoral exposure. So here you should keep less than 10%. and balance, rebalance if required. So this again, you should go into a large cap kind of a fund, any blue chip category. So the ICICI dividend yield, you can shift it to an ICICI blue chip. Similarly, with the White Oak Healthcare, go for the large cap category because you don't have, it's not very, well balanced in that sense. Then you have White Oak Multi-Asset 2,500. Here you can expect, lower returns than pure equity because of the multi-asset, and you can replace this with a large or a mid-cap equity fund. Since you already have HDFC mid-cap, you can continue there, but you definitely need to add one large cap fund in this category. So what I would suggest is that, you exit or reduce from ICICI dividend yield, White Oak Healthcare, and White Oak multi-asset. And instead, you increase your allocation to a Nifty 50 index fund, which can be low cost and stable. Parak Parik Flexi Cap Fund, which is consistently, given the returns. Mirai Asset Emerging Blue Chip for your large and mid cap space. And your Quant Flexi Cap for high alpha and, which will give you the desired return. So you can look at these few funds and replace and, reallocate accordingly. So I hope that has answered your question. All the very best.
All right, yeah, definitely. Quickly we will just move on to our other query also, and we will take Venkat's question. We are trying to get in touch with him because he's a retired individual, and we need a lot of other details also. Invested 20 lakh in SBI Energy Fund in the last year and wants to know if he should be continuing in this fund or not. So limited amount of details, Nisreen, over there.
Also, I think he's also mentioned ICICI Manufacturing Fund. So the retired person has invested in SBI Energy and ICICI Manufacturing. So I'll answer both the options that he's given. So basically, the energy sector, especially the renewable energy sector, has done well recently. But as a retired person, you have invested in both thematic funds, which tend to, be very risky because of the concentration risk. So in a normal portfolio of a person who's investing during their accumulation phase, say from the age of 30 to 60, we do recommend sectoral or thematic funds, but up to 10 to 15% combined. Okay. Now you've already reached the retirement stage and you have got 20 lakhs both in these particular funds. I'm not sure about the rest of the portfolio, but I will certainly suggest for these. So if you have made, certain amount of gains, which you said you really haven't because you've been facing losses in both these funds, you can, consider partial profits, for example, and switch to a more diversified hybrid fund or a large cap equity fund. So keep only a small allocation to either of these categories. Okay. You should not be looking at manufacturing either because in this shorter time frame manufacturing has actually underperformed, as you have also seen in your own portfolio, because of inflationary pressures and global economic slowdown. So what you can do as a theme, it's likely to do well going forwards, but because of the Make in India initiative, the PLI schemes, etc. But since you're already retired and now you're looking for, possibly I'm understanding that you're looking for more safety and less volatility in your portfolio. As a retired person, you don't really want the stress of too much of volatility. Therefore, what you can do is you can maybe just wait for a couple of more years for the manufacturing theme to hope that it could perform. But if you're uncomfortable, with the underperformance, you can consider exiting and moving into balanced advantage funds like maybe ICICI Balanced Advantage Fund, multi-asset funds, and large and mid-cap funds for a blend of growth and stability. So what I would recommend to you is, you equally apportion your portfolio into ICICI Prudential Balanced Advantage Fund, HDFC Hybrid Equity Fund, Axis Blue Chip Fund, UTI Multi-Asset Allocation Fund, and SBI Corporate Bond Fund. This is for the debt exposure. So this is, typically much more suited for a person who's in the retired category like you are, in a retired phase of your life. You will have more peace of mind and less volatility. And, after about 5 years, if you calculate at about 12% compounded annualized growth rate, your portfolio would look like about 58 to 60 lakh rupees at 12% at compounded growth rate for 5 years. So I would
Right,
certainly
Nisreen.
urge you not to keep all your
Sure,
eggs in one
sure.
basket, but and you
Right,
might be having
right.
other funds as well.
Sure. Right, Nisreen, we'll just connect back on this because there's a big breaking news coming. CBDT has extended the due date filing of ITRs. And now this date has been extended. This date, the new date now is somewhere around September. I have with me 15 September 2025. So the ITR filing date, which is 31st July 2025, this time has been extended and the new date is 15 September 2025. I have with me my colleague Prakash Priyadarshi for more details on this. Prakash, there is a circular from Central Board of Direct Taxes. What does it say, and why this extension in the timeline?
Yes, that's a very important. It's an important development, especially in the context of new ITR filing forms, and therefore the Income Tax Department has come out with the new notification where it has clearly stated that the filing dates of ITRs have now been extended to 15th September 2025 from 31st July 2025. And this is primarily in the context of extensive changes introduced in the notified ITRs, and considering the time required for system readiness and rollout of income tax return utilities for assessment year 2025-26, Central Board of Direct Taxes has decided to extend the due date for filing returns. So it's a very good decision, especially in the context of new forms, because it requires time, it requires some simplification, some hand-holding from the departments, and therefore, considering all these factors into account, the government has decided to extend the due date. So it's a timely decision. It's an effort by the government. It's an effort by the government to provide hand-holding to the taxpayers, because the new forms have been introduced, and therefore it requires time to get used with that and understand all these new changes which have been made. And therefore, Central Board of Direct Taxes has come out with the notification where it says that the due date of filing of ITRs had now been extended to 15th September 2025.
Prakash, one more thing. That's been highlighted in the notification, which I would request you to elaborate for our viewers also. The extension is expected to mitigate the concerns raised by stakeholders and provide adequate time for compliance, thereby ensuring the integrity and accuracy of the return filing process. What are these concerns raised by these stakeholders? If you could just elaborate on this, please.
Look, it is clearly stated that ITR 2025 for the assessment year 2025-26 have undergone structural changes, have introduced some new compliance to enhance transparency and with some more details, and therefore the government. Therefore, these stakeholders, industry bodies, of course, CA organizations, they have approached government to provide them some additional time to understand these changes which have been introduced in a new form for the assessment year 2025-26. And therefore, they reached out to the government, Ministry of Finance, especially the Department of Income Tax, and they requested government to come out to provide some additional time to understand these changes, and so that the government has taken all these viewpoints and the feedback which have been provided by these stakeholders and decided to extend the deadline.
All right, Prakash, thank you so much for all those details. And this is a breaking news where the ITI filing date has been extended. Nisreen, this is a new development. I would like to have your take also on this. What kind of a relief are we looking at over here?
So basically, as you mentioned already, Kavita, the time frame always matters, and when there's an extension given, I think all our taxpayers will breathe a sigh of relief, and that's the main thing from the taxpayers' point of view. That's what we look at, to have a little more time to manage our expenses, pay our taxes, and the common man will definitely be relieved.
Right, Nisreen, I'm sure there are many aspects on this particular news that we'll be talking about later in the show. But then let's move on to our other question from our viewer. And, let's take Syed Mastan's question. And he wants to know about Motilal Oswal Midcap Fund. I'm really not sure about the clarity of his question, the detail of his question, but it's just one particular question on one fund, Motilal Oswal Midcap. I don't know if he has in the portfolio or he just said kindly updating the fund status. So yeah, I don't know what does it mean.
So, Motilal Oswal is a slightly aggressive fund in the small and mid cap space. The small and mid cap category in the mid cap fund is about 40%. So, if you're looking at a slightly longer term and if your risk appetite is a little higher, you don't mind the volatility, then, you're well placed. But if you think that you don't want a very bumpy ride in your investing journey, then, you can be looking at some alternative funds even in the mid cap space. But as a fund house, Motilal is basically very small and mid cap oriented. It is an aggressive fund. There will be
Okay,
a lot of cherry picking done. Stocks will be picked
sure.
based on their, on various factors. But in any small and mid cap fund, the horizon of investing has to be slightly
That
longer.
definitely matters.
So,
Right, right, right. So Nisreen, I'm going to stop you over here because I'm also joined by Pankaj Matpal, and let's again talk about the ITI filing due date. That's a new date for this year. It's 15 September. And Pankaj, welcome to the show. So this is the current notification that we are talking about, the latest notification that has come out from CBDT, Pankaj, and it says that the timeline has been extended to 15 September 2025. Formal notification to this effect is being issued separately, but there are few concerns which are highlighted in this notification on which I would like you to elaborate, which also mentions that this timeline will help the kind of concerns that the stakeholders might have. It will mitigate those kind of concerns, provide adequate timeline for compliance. Every year we see people and especially tax experts like you and CAs like you who find it very difficult, to fulfill this timeline or to do everything within this timeline. What kind of a relief are we talking about over here from someone who files return from your perspective and also from a taxpayer's perspective, Pankaj?
Yeah, Kavita, this is a really good thing because generally we see that most of times taxpayers are unable to file their returns on time because of several reasons. Because they want to file on time, but sometimes the TDS returns are not filed on time and that is not updated, or some documents are not available. So there may be some reasons. So if extra time is provided, it will really be helpful. It does not mean that CBDT wants people to delay their ITR filing. They can definitely start now, but if they will have extra time, so in any case, if they are not able to complete or meet the compliance requirement, they will have some time in their hand. So in the beginning itself, if it is announced, it is good, but otherwise, at the last moment, people like us keep demanding for that, or taxpayers demand for that, who wants to file their ITR. So I really appreciate this thing. At the beginning itself, it has been announced.
Pankaj, what is the guarantee that for this particular year, 15 September will not be the last date and people won't be relaxed till that time or not moving till that time? Because we all know 31st July was cumbersome, definitely, but then now it's the 15 September. The last minute thing still remains for 15 September now. Can we say that? Or you are saying that people will really get active and, whatever formalities are need to be done or which used to get stuck won't be stuck this time?
This is very important because in general, people always wait for the last moment. That should not happen because now it has been announced that you have time till 15 September. Does not mean that taxpayers should delay filing their ITRs. They should do it as soon as possible. And the extra time is only has been considered due to certain reasons because of the experience and the compliance requirement has increased now. So CBDT has taken this decision. So my expectation that taxpayers will consider this, that extra time is not that they take it for granted. But yes, if in any case they're not able to comply by 31st July, they have the 15 days extra window in their hands.
The notification also says one very important thing, Pankaj, if you can explain that these changes have necessitated additional time for system development, integration and testing of the corresponding utilities. What does this mean, if you could just explain this?
Yeah, definitely because there have been some changes because every year when there are changes in the ITR filing system, so system has to be updated. And as they accept that system has not been updated fully, there may be some delay, there may be some bugs. So it may be a reason. that they want to provide extra time because CBDT has already accepted this thing. It means what you are telling me right now, it means that they have understood that because of the update in the system, there may be some delay in filing ITR. So that is why they have provided the extra time. So it means that initially, if we are trying to file ITR, there may be some bugs, there may be some difficulties, and one should not worry about that. And because extra time has been given, and means they should comply. They should not worry that they are not able to file right now. So extra 15 days are for the region only because of system update.
One last question, because I also want to understand what kind of a relief it is in this sense. The notification also says that credits arising from TDS statements due to filing by 31st May 2025 are expected to begin reflecting in early June, limiting the effective window for return filing in the absence of such extension. So this is a relief, can we say that?
Yeah, see, this is very important. What happens when TDS is deducted or you are paying tax in the last quarter, that has to reflect in your 26 AS and in AIS. See, your employer had deducted TDS. After deducting, they will deposit it in the central government account, and then it has to come in Form 26 AS. Then only when you file ITR, it has to match with that. So sometime it gets delayed, or this time, as it is as mentioned by you, if it is expected to get delayed, in that case, you will not be able to file your return on time. Means if you even want to file, you cannot file it correctly unless your TDS account statement, which is Form 26 AS, is matching with the tax deducted and deposited. So that is why, because start period is being delayed, so you definitely need extra time to finish it. It means simply that in the beginning, as we know, for the sake of saying, we can say from the 1st April itself, you are eligible for filing ITR. But actually, practically, that's not possible because your TDS, what was deducted in the last quarter, that will not reflect in your 26 AS. So that is why, because we are expecting a little delay in this, and that is why extra time has been provided for this.
All right. Thank you so much, Pankaj, for explaining all the angles of this particular development. So it's a huge breaking news and a news for relief also. But at the same time, one doesn't have to be very complacent and keep waiting till the last date. So the notified ITRs for the assessment year 25-26, it has undergone structural and content revisions aimed at simplifying compliance, enhancing transparency, enabling accurate reporting. And due to this reason, the deadline, the ITR filing deadline, has gone up to 15 September this time. That will be all on the show as well. Nisreen, thank you so much for taking time out, and we had a breaking news, so we couldn't take all the questions, but then let's do it next time on the show. Thank you so much, Nisreen, for being a part of this show today. And for all the viewers, I'm going to once again flash our WhatsApp number and email ID to keep sending your questions to us. Thank you so much.